Hi, this is Joey Kleiner here on behalf of EstateView Estate Planning Software. Today I'm going to walk through the Charitable Remainder Annuity Trust Calculator, or the Crat calculator. It is in the third column on our home screen here in the Calculator section, the second from the top. If we click there, we will see the full screen centered inputs available for us to use. This calculator has a standard mode, a pro mode, and a pro plus mode. The inputs are shown in this table layout by default, but we can go to a form layout for a little bit more space if we would like. For this example, we are going to use a 75/20 rate of 5.4%. However, this can be adjusted up or down to run various projections. We also get to see the previous 2 months and this month's rate for the section 75/20 rate, which is available for us to use. However, the software does remind us that it is best to use the highest rate of these three, which is currently the May 2024 rate of 5.4%. The next input here is the payment period as either a term of up to 20 years, and we could click that up or down, or we could do a lifetime payment for the life of one or two individuals. If we use two individuals here, we can show the first one as age 70 and the second one as age 65. As we change that second life down, we can see our maximum payout is adjusted. Finally, we will see the $1 million here at the last trust value input is going to be the starting value of contributed assets to the trust. Once we're satisfied with our inputs, we can either click to see the results at the top, or we can click move to the left, and this will move our inputs over to the left side of our screen, revealing the summaries table at the top to show both our inputs that we used as well as the result of this calculation. So here we have the first Crat that we're illustrating. It is a lifetime Crat with 2 lives in being. The first grantor's age is 70, and then the surviving spouse's age is 66. They contributed $1 million, and the trust will pay out 5% of that value. The Section 75/20 rate used to find the charitable remainder value is 5.4%. With these inputs, we get an annual annuity amount of $50,000, an annuity factor of 12.2226, and the value of the annuity is approximately $611,000, leaving us with a charitable remainder of almost $389,000 with a 0% probability of exhaustion. If we were to increase the payout rate here, we can see that probability of exhaustion will go up to reflect the chance that our investments do not perform as well as our projections. Finally, in the standard mode, we get a short explanation of the various results, as well as a few warnings here about the 5% minimum distribution test and 10% remainder test. If we were to move from the standard mode to the pro mode, we will see additional inputs show up here with blue bars indicating that is a new item. This first transfer date would be the date assets are transferred into the trust, and this will help us select our 75/20 rate as required to be either this month or one of the preceding 2 months, as well as prorate our annuity amount for the first year to be less than subsequent years, as we are not contributing on January 1st. Additionally, we get the ability to see the life expectancy of our grantor and their spouse. Here we see that as 91 and 87, which together has a life expectancy of 21 years. However, we are only projecting a 15-year and 19-year life for this couple. If we would like to increase this to that 22-year mark, we can do that, and the program will automatically recalculate our results. Additionally, it lets us choose our mortality table used. By default, it will go to this 2010 CM table published by the IRS from the most recent version. However, we can go to a previous version and look at the life expectancy differences if we would like. Leaving this at the 2010 CM, we see that 50% of 70 and 66-year-old couples survive 22 years, so we will use that for our second life year of death. Finally, we increase the payout rate here to 6.63%, and we have a asset growth rate annualized at 7.5%. We could click this up or down based on the projected growth of assets contributed to the trust. However, if we're not sure what to use here, we do have a great Monte Carlo calculator that you could use to get a better understanding of what growth rates make sense based on the time horizon of the clients, as well as the amount invested and a rough estimate of their allocation. The last new input in Pro mode is the income tax rate, which defaults to 37%. However, if we want to project something with a little more capital gains tax instead of dividends and interest subject to tax as ordinary income, we could lower this to say 30%, and that will adjust the year one income tax savings for us. A new feature we see in the Pro mode is this year by year chart of the annuity trust itself. So we get to see both the grantor and survivor age, the probability of them surviving to that year, or the probability of them dying before that year. Moving to the trust, we get to see the beginning value of the trust, the growth of assets in the trust, the annuity amount paid from the trust, and then the ending value of that trust. The chart here also includes our payment rate and the present value of those annuity payments, as well as the present value of the remainder in the trust for any given year. This will continue until the second life has passed, indicated by the second pink line here. If we would like to see this chart in Excel and make our own further customizations, we can click Export to Excel, and we'll see a version be downloaded here in our Downloads folder. And when we click that, it will bring up the Excel file for us to make further edits to. We can also take a screenshot by clicking on the camera icons of the Details table, the Summaries table, or the Screenshot button for our inputs. A nice way to compare the differences between these Crats is to hit the Duplicate button, and that will bring up a Crat illustration 2 with the same values that we used, and maybe the client's not sure if they want to use a term of years Crat or a lifetime based Crat. So we'll model Crat 2 here as a term Crat for the maximum allowable 20 years, keep the same life expectancies for our grantor and survivor, keep our same payout rate. However, we do see the maximum payout rate here is a bit higher, as in the first example, we were projecting to pay out until year 22 from the trust. And in the second example, we are showing 20 years for the trust term of payouts. So let's go ahead and increase this payout rate to the new maximum available. And we can see now our lead non-charitable beneficiaries will receive more money each year at about $74,000 compared to $66,000. However, the reportable remainder for your deduction in year one will be lower because there is less remainder available for the charity in that 20-year time frame compared to the 22 years. We can also see here that the total annuity payments is slightly larger, about $60,000 more will go towards the family over that 20 years compared to the amount that will go over 22 years due to the higher payout rate. Finally, we can see the income tax savings all the way at the end here is much lower in the 20-year scenario based on the higher payout rate and lower remainder value in the trust. If we would like, we can show or hide additional columns, including the growth rate or other items. And then when we close that, we will see our growth rate show up here. If we like, we can drag and drop any of these into a new order. That way we can discuss it in the order that we feel most comfortable. Finally, we get the second details table here, and we can flip between the first and second details to see how those values change year to year. If we would like to see this in a visual form instead of these spreadsheets, we can click Timelines and Charts up at the top, and this will show us each Crat's value as well as the growth in each year. And then we can go and flip between the first and second. We can see the payout rate being higher in the second one produces a more flat chart compared to chart 1, where the value is growing as there is a lower payout rate. And then we can see a side-by-side comparison of the Trust 1 and Trust 2 to see the difference that larger payout rate makes, keeping the second one to barely any growth. We can see a trust logistics screen here, which will show us what today's value of the trust is, as well as what the trust value would be upon death of the grantor, or at the end of the term in the case of a term of years trust. Going back to summaries and details, we can now look at the Pro Plus options. At the bottom of Pro, it lets us know that Pro Plus will include adjusting the time value of money. So if we click Pro Plus, we now see this time value of money illustration rate appear. And this is going to be the discount rate used to calculate the real values and the nominal values in today's dollars of the remainder annuity payments and combine tax savings and annuity payments. Once we add our trust illustrations here, we can save those by going to File, Save As, and then give it a name. So here we'll do Crat Sample Inputs and click Save. This will save an EstateView file to our directory in our Downloads folder. And then next time we would like to open these inputs, we would just go to File, Open, and select that same folder, and all of these illustrations will be repopulated. If we go to File, New, that will reset all of our inputs to the default inputs used by EstateView. Next to File, we can also generate an explanation. So if we click Generate Explanation, we get a pop-up here letting us know we can generate a general explanation, which is a Word document generalized for discussing the Crat technique and other important information about the Crat. We can generate a planner's checklist, which is something for the planner to review, as well as a PowerPoint presentation for this technique, pulling in the specific numbers used in illustration 1. If we would like to have a PowerPoint for illustration 1 and 2, or however many illustrations we've created, we would check those boxes as well. And then finally, we can input the client's name, as well as information about us as the planners, if we would like, or we can use these default ones and edit it later in the PowerPoint file. So once you click Generate there, we will see more downloads here. Starting with the general explanation, we can see the Word document here talks about what a charitable remainder trust is and the different available options and variants, and generally how this trust will work. The planner's checklist is also available as a Word document where you can go in and look at the recommended steps before creating a trust just to make a checklist. However, you can edit this Word document as you see fit. Finally, the PowerPoint presentations are available as well, and these will go through and talk about the specifics of the trust that we ran, how they work, give you some diagrams and pros and cons of different charitable remainder trust techniques, as well as the inputs that you used and the projected outputs and other basic information about this technique. This conclusion slide includes the planner's name and information that was entered when you generated the PowerPoint, or you could come in here in the PowerPoint file itself and edit them. Going back to the top bar here, we can also share this calculator with our client or other team advisors by clicking Share with Client. That will generate a 6-digit passcode for us, or we can enter our own by clicking up and down or typing our own numbers, and then generate a URL that'll be good for 2 weeks that we can copy and send via email to the client or advisor. Be sure to include the passcode, that way the recipient is able to pull up your information with your preset values, and then they will be able to adjust the values on their end to see if they can find a more preferred solution for them. Thank you so much for watching. I hope this video has helped you to better understand the EstateView Charitable Remainder Annuity Trust Calculator and will help create more charitable giving opportunities for you and your clients.